So is the stock market for you? I think so. And what I'm going to show you in a quick example here is an example of the strength of the stock market and how you and your family can really benefit from it. And it's all in the mindset and how you think about it. And we're going to dive into it. We're not going to waste too much time. We're going to make this a quick video and we're going to go from there. Okay, so let's really just lock right into it and go in. All right, so as you can see on the screen, you see the strength of the stock market is what we're talking about. The strength of the market, how it can benefit you. What we're looking at is a chart of the S&P 500, a collection of the 500 biggest companies at the time, and how these companies build and grow over time as a collection of companies in what's called a stock index fund. A stock index fund does not require you to pick and choose which stocks are in the fund. You buy one fund and it's a collection of the S&P 500 at that point in time. As companies get bigger, as companies get smaller, those companies may go into the S&P 500 and others may fall out. But what you're going to notice over time is whatever companies are in that S&P 500 at the time are going to affect this chart, which we see rising or falling. And we're going to take some money and invest it. And we're going to see how that money grows over time. So what amount are we investing in this example? In this educational only example is $10,000. $10,000 here, and this showing this was back in 1940. If this $10,000 we're investing it into an S&P 500 fund, how much is it going to grow to, and what's happening here in this chart? So you invest the $10,000. You see the chart. Spoiler alert, it's going to go up. It's going to go up, and it's going to go up to $3 million. But what's going on in between? A lot of life, multiple children, multiple generations are being birthed here. There's also some heartache and some pain and some positives going on over this time period too. There's a lot of things going on in this chart, and one of the biggest things that I can give to you, and I'm going to come right back to the screen here, one of the biggest things that I can teach to you today is to keep going, to continue to persist, to stay consistent in what you do, because this chart is an example of staying consistent in the market and not being deterred when something negative goes wrong. Let me point that out to you here. So when we look at the market and we see this on this chart that the Japan attacks Pearl Harbor and the market takes a hit and this S&P 500 fund goes down, or index I should say goes down, we're losing money there. We started out with $10,000. Now we're below that $10,000. We're only a few years in, and look at this. Our money's going down. Now, if we choose to get out of the market right then and there, we'll salvage our money. We won't have $10,000, but we will have our money. We'll have some transaction costs in there too, but we'll have less than $10,000, but we wouldn't lose all our money. But I'm pretty sure there were people who thought that when something like that happens, they should take their money out of the stock market, when actually that is one of the best opportunities for you to stay consistent and stick with the market. Or in that moment, if that's when you have the money to invest, you should still continue to invest, because now you have an opportunity to invest when the market is more at a more affordable rate for you. But let's keep going. So this person didn't sell. We continue to hold. We continue to keep our money in the market because we didn't need to touch it. And maybe that's a video for another time, but we'll talk about that. That $10,000 stays in, and it continues to grow over the years. You'll see these blue shadings across where we're coming up on, and these are these big drops in the market where the market dropped more than 20%. You can see this happened in the 70s. You can see this happened in the 80s. You can see it happened not necessarily in the 90s. The 90s were a huge boom. But then you saw an immediate dot-com crash. Add to the fact of the dot-com crash that was happening, you had the 9/11 attacks happening. Then you had a banking crisis and credit crisis, what we all know as the Great Recession. During this time, a lot of other stuff is going on. The market is still going up, and your money is continuing to rise. Remember, you haven't put another dime into the market since you put that $10,000 in there, and now it's $3 million by the time you get to 2022. This is an example of how the market grows. And if you're wondering, well, what is this amount now? Because this chart says 2022. Well, trust me, the market has grown since 2022, and it is actually a lot. It's actually more than this now. But the point is consistency. Being able to put something aside and say, I'm going to stick to it and allow the money to grow. Allow it to build and compound over time for us. This is the example of time value of money. If you put this money in a checking or savings account, or in a mattress, or in the backyard in a Folgers can, it's not going to appreciate. It's not going to build. This is an example of making inflation work for you. It's making your money work for you. So $10,000 back then was a lot of money. I get that. But this is just an example. And maybe $10,000 is a lot for you right now. But the point is, whatever you have, if you start now, that money can grow to exceed your wildest imagination if you continue to let it work for itself, build and compound. So the money it produces other money, and it just continues to grow and build over time. If you have the ability to pass that money on to the next generation, it has even more time. And the rest of your money that you have, you get to enjoy. That's what this is all about. You can have a lifestyle where you can be very successful with your money working for you, whether you own a business, whether you are a 9-to-5 worker, whatever your situation may be. If you have the ability to take a portion of your income and put it aside consistently, you can see this type of growth. Now, I'm not talking about just a one-time contribution. That can still happen here. But if you want to see this really accumulate, you consistently take money out of your paycheck and allocate it to an investing plan. You're going to be able to see a tremendous amount of wealth being built. And it doesn't have to take a long period of time. But people, look, if you can, and if you know this is how it works, why wouldn't you designate a portion of your money to this? A portion. I'm not saying all of it, but a portion. And if your company is going to match whatever you put in, why would you not do that? Why? Maybe you don't have enough. You feel like I'm not making enough money to do that at this point in time. It doesn't matter the amount. It's the consistency. It's the habit that you're forming and building. Because at some point you will have the ability to do so. And you don't have to make money be the thing that you can never figure out. Money is something that can be something that works in your favor. It doesn't always have to be against you. Because this is compounding, and this $10,000 is growing and building over time for your benefit. But it's another $10,000. Maybe it's on a credit card. Maybe it's in a car. Maybe it's in some type of other loan that's working against you. And it's accumulating and building too. So you can have this money build and grow for you or against you. It's the movement. It's the movement of the money. The money is supposed to continue to grow and flow, not stay stagnant and sit in a place. It's not all money is not meant to be spent and wasted. And I shouldn't even say wasted, but just consumed. So you have to get serious about this, because this chart here, this chart you see, can be the difference in your financial future. Every time the market goes down, you think that this is a bad thing. If you look historically and think about this chart, you'll realize this is an opportunity for you. At no matter what age you are, for you, the next generation in your family, whatever the case may be. Now, we can go into a lot more things that are wrapped around this, where we can build the layers around this. Well, what type of account is it in? What type of taxes am I going to owe? How do I transfer it? All of these things matter. But the key point that you have to have is the right mindset and the consistency of, I'm not going to touch this. What's the market doing? Should I take that money out today, tomorrow, next week? If you don't have a system to where, or understanding of this needs time, of this is going to need to cook and bake for years, decades, then you're going to miss out on this opportunity. You need some long-term wealth to be built for you. This is an example of how. Hope this was helpful for you. You have questions, you have comments, put them in the comments. I'll do a follow-up on this. I hope this was helpful for somebody. I appreciate it. Take care.